Good morning and welcome to Equity Story, Wednesday, the 26th of July. I'm here with Claude, and of course, we are going to talk about fundamentals and look at some announcements this morning. We're going to look at what happened last night, and we're going to talk through our thought of the week, which we concentrating on the most impressive update, / quarterly that we found so far. Before I start, I've got Equity Story disclaimer in front of you. Of course, everything we talk about is general advice only. So we just really talk about the fundamentals and the technicals whenever we look at story. All right, Claude, let's start. First of all, what happened last night, which actually wasn't too bad. It was actually quite positive. We had some good numbers out of the US, which drove the market higher. And then we had a couple of big announcements from Microsoft and Google post-market close, and they were quite mixed. So we're going to talk about that in a sec. But the actual numbers I want to talk about last night, and I'll quickly change the screen so you guys can have a look what I'm looking here myself. And that is there's looking at trading economics, of course. I think it was from calendar wise, because remember, we've also got very, very important news today, and that is our CPI numbers. But it was confidence. That's what it was. Consumer confidence came in at 117 versus forecast, so that was quite positive. It sort of flowed on through the fact that the consumer out there is looking quite happy or happier, even though inflation is quite high and you've got still interest rates quite high. So that was a positive that drove the markets in a way.
Another one
last night with
another one I wanted to chuck in, Peter, was Google's results came out. Happy for the market.
Yep.
So that's up.
Yeah,
that's
go
up
on.
6%. That's up, I think, 6% in after hours. I just checked then.
Okay.
Disclosure, like Google's one of my biggest holdings, or Alphabet now it's called. So I own shares in that one. But yeah, like I just thought that's sort of relevant. Good to see, I guess. Good for markets as well, because it's a big one.
Well done to you by holding it. But look at that. I mean, just looking
at the flip side of it is Microsoft's down a little bit, not as much, but it's down on results. But it's had such a strong run lately. In the last year, it's up massively. In the last 6 months, it's up even more.
Yeah, exactly. And look, I think this is what we talked about during the week, that some companies have run so hard that any little negative the market will pick up on and just take the profits out of it. And I think that's what happened with Microsoft, because if you look at the actual Microsoft results, the consensus was beaten quite comfortably, right? EPS 269 versus consensus 255 and the previous 223. Revenue beat consensus as well on the forecasts, right? So all that was pretty good. I think what the market concentrated on was the outlook, which was a little bit weak, and the slowing growth, but still doing quite well, Microsoft. But Alphabet, on the other hand, again, beat its expectations quite comfortably too, but they are going up because they're coming up from a lower, I suppose, hope, right, from investors out there. So you can see there's a variety, but both companies are pretty good. And if you're looking to build a portfolio, it's probably two companies you want to probably hold and have. But look, I like it. I think there was a pretty good both results, showing that these companies are still going to make quite a substantial contribution to the NASDAQ moving forward. So very positive. I'm liking from that point of view. So that's all good. We'll see how the market actually takes it tonight when the market's actually open in the US. But Google looking good after market, Microsoft not so good. But at the end of the day, I think overall longer term, both are going to be very, very good. All right, so let's move on.
And I own both as well. I got to keep in mind my disclosure there. Talking my book there.
Yeah, only some of the best companies in the world.
Just long term. They're like the buy and hold forever kind of companies that I have.
Fair enough. It just shows, that doesn't matter how big they are, I can still make quite substantial money on these sort of things because they are very, very good for a reason.
Yeah, Microsoft's gone for a massive run lately, but I doubt that's sustainable.
All right. Let's move on. I've just quickly going through the actual commodity prices. You can see gold not doing too much, fairly steady over the last couple of days. Iron ore again fairly steady, lithium steady. So not much moving there. Let's flip to the next screen. We're going to look at some announcements. So I'm going to do a new share screen for you. We're going to look through some charts as well. All right, I'm going to start with, actually, let's have a look at Google. Let's have a look at those two just to see what they look like on the charts, because I know maybe some of you are actually trading this. You can see beautiful charts by Google, by the way. So that's come back, bouncing off. This is when you buy, and on that announcement, you're buying that tonight. And you obviously want to take it up to about 140 short-term to medium-term trade. So that's looking pretty good. Microsoft, on the other hand, is probably giving you opportunity to actually get some. Let's have a look at that. So let's have a look. Okay, so you can see that's been going quite well. It's probably going to come back to that 330, maybe 340. So swing and come back again. So that's what my prediction on that is. That's that's what I'm expecting from that announcement. All right, let's look at some of the other Australian news. So Iluka come up with the updates on its quarterly, on its rutile and mineral sands. So that is today. I'm going to go on a daily so I can have a look at this. So it's actually bouncing today, 1%, not too bad. Weekly, not bad. Like I said, generally speaking, when I look at quarterlies for the big mining companies, it doesn't disturb my long-term thinking unless there's something really left field here. So short term, it can fluctuate up and down. I'm looking at a longer term picture, where's rutile, where's rare earths, all those sort of things. And if I'm happy with where the things are going, as long as they don't completely collapse production-wise or cost-wise, then I'm happy to hold. And I think this one is still a hold. We talked about it last week, that, just smudge that line, still holding, and it's sort of bouncing off that, which is nice to see. A couple of gold players, let's have a look at those just to see exactly where they are at trading-wise. So red, still above. So if you bought this for some reason, there's better gold stories out there. It's a hold technically. Let's look at WGX. Again, you look through the quarterlies, they're okay. Nothing outstanding in any of them. WGX, again, if you bought this on this green candle here, it's still a hold. It's come back to the trend line. Looks okay. Look at mineral resources. I know it's a bigger one. So again, the same thing is applied to BHPs, Rios, and MINs. This one's actually under trend. So I'm not super keen on that one as yet. It needs to get over the trend before I get interested, but not a bad update today at all. PRU, let's look at that one. And this one is a gold player. It's actually, again, it's surprising that some of these are trading below, really, but it's probably got to do something with Africa, because we had, we've been listening to all these troubles in West Africa and so on. It just makes you nervous. So I can understand why investors are maybe reluctant to get back in there. So this one's not a trading one at all, but not a bad update either. Up quite significantly today, if you look at that. So yeah, up 1 and almost 2%, so up 10% for the week. Next one. Okay, we're moving into Claude, and you can join me here. And we have a pretty strong discussion about cats, who came out with an update. And look at this. Before you go on, and I'll give you the microphone in a sec. I have to disclaim, I have been trying to make a quick buck on this by buying some at low ones, because I'm expecting an okay update. And the other reason, of course, is the weekly looked very, very good last week. So I thought, okay, look at that. I'm going to buy in this. So what did you think of that update? And I know you've talked about it extensively, but please enlighten us.
Yeah, great, Peter. So I've followed this one for a long time. I thought today's update is sort of in keeping, the style of it, high level, is in keeping with my fairly skeptical opinion of Catapult. Look, they'd say ACV growth up more than 20%. That's good news. Revenue growth, this is for Q1, up more than 20%. That's good. Churn, low, below 5%. That's good. Reaffirmed free cash flow positive in FY 2024 following a strong quarterly result. That's good. It's also all super vague, which is really just generally the way that the company has gone forward with itself. Cash flow is not profit. This kind of business model can have better cash flow than profit. So if they get paid for a yearly subscription up front, that helps their cash flow straight away, but they only recognize it as revenue along the way. Also, obviously, you got some depreciation, amortization expenses that are not in the cash flow necessarily. So depending if they've cut back on investing now, that can make their cash flow definitely ahead of, I guess, where you'd call their sustainable profit. So overall, picture with these guys is that the results, the actual devil tends to be in the details. So I wouldn't get too hopeful that they're super undervalued. Having said that, I think where I landed, Peter, was I actually do like this as a trade. And the reason for it has nothing to do with me thinking that they're a high quality company or me thinking that they're going to become a super profitable company and justify their market cap. And it has everything to do with just sociology, people in the market, what people are saying. If you zoom out and look about long term of Catapult, you know, back in 2016, their share price was above $3.50. And they raised capital to do a big acquisition in those days at a much higher share price. I want to say around $3.20 or $3. Then they raised capital again, and then again. And each time it was a lower price. And each time, you know, that they raised capital, they would have gone out to all the institutions in town, all the small cap fund managers, and told their story about how it's going to be so great, blah, 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 blah. And each time, anyone who believed their story has gotten absolutely nailed. Just no real chance to get a great profit. Sometimes if the share price moved up or whatever, anyone who sold and took profits was the one that was laughing. So generally speaking, always expenses higher than you would have expected, certainly than I would have expected. Always a situation with so many announcements that are just a little bit vague. And even if they seem to be positive like this one today, they do very little to build trust. It's like, no, just tell us the exact numbers, you know, because why wouldn't you tell the exact numbers of the ACV that's up at least 20%, et cetera, et cetera? And what not telling the exact numbers does is it means that, you know, when they say report the half year, it means that they don't necessarily give the breakout of what came in the first quarter and what came in the second quarter. If it's steady growth, is probably better than if there was a sudden big, you know, bump in the first quarter and then there's gone to nothing in the second quarter. So generally speaking, tread carefully here, don't fall in love with it. But the point that I'm trying to make is that there seems to be a movement to actually rehabilitate the image of Catapult. One fund manager I admire, you know, he has a fund, he invests in companies that just have their founders involved. I guess since Catapult founders are involved, Catapult qualifies. He's also a bit of a value investor. So I reckon the fact that he's sniffing around, it kind of shows that you've got potentially a new cohort of people in there that haven't been burnt by it and are looking to, I guess, tell a new story. And I think it might succeed. And because the main reason that Catapult has not been able to even really begin to rehabilitate its image is because it wasn't cash flow positive. So it's always going to need to raise more capital. And it's already been in front of everyone asking for money a few times. And probably all of those times, those people thought it wasn't going to need any more money. So nobody believed it anymore. So what this point about them being cash flow positive is absolutely key. And that is the potential inflection point here. So you have a small fundamental inflection point where you go from, you know, worse to bad or whatever. And then you have a potential just sociological movement whereby, you know, basically the damage done to the reputation in the market over the last 10 years, just time heals that wound to some degree. So we're putting some space between now and the last capital raising, and that probably helps. So that's why it could be a good trade. And of course, the story, it being in sports data, massive tailwind there, huge demands. I think that the point here is that by rights, in a way, you'd think Catapult should be a really good business, one of the best on the ASX, because it's got a oligopoly style position in all of this this sports data collection, measurement, and management, and then the software that looks at it and gets insight to the from the athletes there. Now, unfortunately, they've not been very focused on this narrow, very high value bit, and they've had various gallivanting around into prosumer and buying different companies with different software rather than building it themselves. They have nice office renovations, etc. Blah blah blah. Not really inspiring there, but the point is the story is true. Like the actual potential for this business is there, and so the play for me is just you have a company that has great potential, unlikely to really achieve that best potential, in my opinion. But what you're playing is the number of people that believe that potential is achievable. And it got to a point where, you know, it failed a lot, and the number of people believing that the potential is achievable was very low. And I think that's changing now, and that's what you're playing, and that's why I think that there is actually a trade there.
Yeah, I agree, and that's the reason why I'm in this as a, you know, there's a story in there somewhere, right? That's actually pretty good. Am I expecting it to realize its 100% potential? No. Am I, hoping that it's going to recover somewhat? Yes, that's why I'm in this. Technically speaking, you're getting in. That update was good enough, I think, to keep that thought, like you said, the hopefuls out there see that there's a turnaround happening, even though, please, Claude, please don't leave the facts out, because we don't want the facts at the moment. We just want to go on hope, please. I want my hopium that this is a good company. Look, I think technically speaking, 126, you'll be targeting that. You're buying this on that announcement. You're buying this, especially actually last week. If you didn't buy this, you're buying it on that announcement. And look, you never know. I mean, if they can, Claude, if they can maybe hit 50% of the potential, the company, it should be much higher than it is right now, right? And that's what I'm looking at, because it does have potential. And like you said, oligopoly, it does. I like the actual tech of it. So for me, overall, pretty good. So look, positive. Let's see where it takes it. There's obviously still a lot of skeptics out there. I'm half included in that as well, because I still want to see the numbers and I still want to see, further improvement and so on. We'll see what happens. But so far, fingers crossed, it's turning positive from investment point of view. All right, let's move on to the next one, because we've got quite a few of them to go through. EVS, just quickly. Claude, did you have a look at this one?
I did have a quick look at this one. Again, it falls into that category where no real cash flow numbers there. Mm-hmm. They actually, right now, as we're speaking, they've got a conference call on, which I'll probably end up missing. But look, the good news in this one was that they added 3.1 million of ARR. That got their total ARR up and growing again. They didn't have too much churn to worry about this quarter, but they have had churn in the past. So it's not exactly the smoothest grower in terms of ARR, but I'd say the more important thing you got to worry about with Envirosuite by far is what's their loss, what's their free cash flow, and we didn't get that info now. So I would not put any stead by it if I was in a shareholder or interested in the stock. And it's up 10% this morning, but I just think that those people are flying blind. This doesn't really tell you anything.
No, I agree. I think it's too early, and I think you're absolutely right, because they didn't say those numbers, because they're probably still.
It's bad. Even less than what the Catapult said in there. You know what I mean? The Catapult said the one actually key important thing is free cash flow positive in the full year following this strong quarter. So that is extremely vague, but it is actually still more than what you get in terms of if you're a shareholder of Envirosuite, obviously. They know roughly what their free cash flow going in and out. I'm sure it's not very hard for them to, say this is how much we had in our cash account at the end of last quarter. This is how much we have in our cash account this quarter, and, figure out what the difference is. Obviously, they're capable of, I would argue, obviously, I believe they're capable of doing that, and they've chosen not to. And that's going to tell you a lot.
All right. So technically speaking, no, way too early, probably even quality wise, you wouldn't be touching this until further down the track, if ever. All right, let's move on to the next one. DRO come up with their quarterly update. And again, we're expecting fluctuations from quarter to quarter because of that. They are contract-based company. Problem with DroneShield for me, while it sounds nice, winning big contract and so on, can they make any money on these contracts? And it doesn't seem like they can. So I'm just looking at the actual cash flow. So that is my biggest issue with contractors starting up. You can get $1 billion worth of contracts. If you price them wrongly, if you can't make any money on them, what's the point? Probably none.
Look, I think it goes. It's like the top line result is really strong here, and as we've known with them announcing order after order after order. But I think that what you have to keep in mind is that the chairman been selling. I think it's the chairman actually. Anyway, Director Peter James. He's been selling shares at 23 to 25 cents. You also have, I believe, the CEO and founder. He's been selling shares 25, 23 cents. So these guys happy to unload shares at well under the current share price not long ago at all. So, it's great. It's funny to see like the FOMO and the speculation and all that sort of stuff in the share price. Like, yeah, fair enough. I get it. It is having strong scales. But the insiders are saying, yeah, great, I'll exit some of my investment now. So
this is a sell. This is a technical sell. Look, I mean, there's a lot of resistance around there. that quarterly, while it looked impressive, it wasn't impressive for me because, like I said, I don't like to see, you know, big quarters and still losing money on them. I mean, this is just not right. So for me, you have your fun, you know, you get it up there when the contract wins, and then you sell on new. So I think this is a sell for me, technically. Let's move on to the next one. Somnomeds, another one we sort of follow from the side. We had some flirtings with it previously, you know, trade here or there. I think again, unprofitable, which is unfortunate. It's market's not happy with what they're seeing, so we're going to let one go to the keeper. Next one is PGC. Let's have a look at that one. Paragon, do you know much about this one?
I followed it for years. I didn't get time to have a close look at the update today.
All right.
Yeah, you go with the update today. I'll give you some zoomed out vision.
Yeah, that's okay. Look, the thing is, anyway, when it's below trend, we really probably don't want to hear too much because we're not going to trade it anyway. So I was going to spare you the time, and we're going to move on to the next one.
I'll tell you high level because I can see it hasn't changed. Look, the problem with this business is capital intensive business, growth by acquisition, using debt to grow, still has a ton of that debt. So definitely put it in the high risk. I say always, you know, these indebted companies, you know, they're always high risk. So would be pretty cautious of that. You know, with the high risk stocks, I generally say I think most people on this call would at least want a good chart.
No, exactly. Claude, are you okay? All right, I like it. AND, another one. Let's have a quick look at that one. I'm not sure if you follow this one. It's a little tech in an M&A space because the chart's starting to look quite decent. What do you think? Did you see that one?
Yeah, I do follow it. I think it's sort of vaguely in that sort of investable area. I think that they've really struggled to, I guess, show any solidly good quality in their business. They've had a lot of, you know, they've tried a lot of trying to present their business as like a software as a service recurring revenue business. But actually what they have is a really tough situation where their software, which they try and sell as recurring revenue software, is actually software that it's used to manage like deals, like mergers, acquisitions, takeovers, that kind of thing. And so it's all about, you know, giving the right people access to the right documents and being able to see who looks at what, you know, documents and remove them then necessary and control who sees what. And so it tends to have a natural, you know, time when it might roll off because people have finished their transaction and they're not really using the software anymore. So it's been a bit of a hard one for them to sell in that regard and to turn into a recurring revenue. They can sometimes do it because some of their clients might be like, you know, a consultant or something that's just constantly doing deals using their software. So it's not a completely hopeless case, but it is a little bit difficult in that regard. So probably never one that you would want to assume that's going to have fantastic, you would never want to have fantastic metrics at multiples on this one. But having said that, for the last 12 months, they've generated, you know, very modest free cash flow of about 200K. So most of that cash expenditure has gone on to into intellectual property. So, you know, probably developing their software solutions and that kind of thing. So overall, it's just sort of this break-even company that's probably not your most high quality software stock. It's got 20K in cash, it's break even. So for that, I say it's investable, just not necessarily the most exciting thing.
All right, I agree with you. I think, oh, look, the chart's starting to pick up. Maybe there's a trade in there. The market reaction to this morning was negative. So, you know, the quarterly when they went super impressed with it. So maybe just wait till the week, see how it goes. But maybe just need couple of weeks, actually, 2 or 3 or 4 weeks, and see how it's trading then. All right, let's move on to the next one. CTD. We came up with an update for themselves. Looks pretty strong. And in the whole actually space, we've seen HLO, we've seen Flight Center come up with an upgrade. Did you have a look at this one? What do you think?
Look, I don't know. I don't cover it pretty closely anymore. It's pretty much a big company. Okay. So for me, it's probably, you know, in that class of more expensive growth stocks that are generally well thought of. You know, I can get why it's there. it has good metrics in sort of terms of like return on capital, stuff like that. So there is, the issue, I guess, that a lot of its growth has been growth by acquisition. And honestly, I could scarcely think of a company that has pulled it off as well as corporate travel management. So I guess like fair play to them. They've got to be by far the most successful roll up on the ASX, except maybe WiseTech if you count WiseTech. But generally, that's not where I'm playing. If I'm doing high multiple stuff, I'm looking for something. You always want to have time on your side. So for me, I want to know that the growth of this company is coming because of some genuine moat advantage. To say, pick on Pro Medicus, like it's pretty darn obvious, for certain kinds of customers that are looking for the highest time saving and the highest ROI, and they're really thinking about how much volume they can get through using the same workforce of radiologists. Pro Medicus is just the number one thing. It's just faster, it just saves the time of the radiologists, which then allows them to do more work. Also, like, it becomes radiologist driven because they want to have the work-life balance of being able to view radiology scans on their iPad by the pool, if that's how they work. So yeah, it's just a really obvious moat, and it's not coming from their growth's not coming from them buying other companies, which is where corporate travel's at. So probably just tradable, but I'm not enthusiastic about this.
I love how every story we talk about, it leads always back to PME for you.
I haven't done that for ages.
All right, so let's move on to the next one. Look, I agree. I think
I obviously own PME, by the way, everyone.
Of course. But I love it. PME is obviously a great company, but CDD, interesting. Not much of a reaction this morning to that announcement, but there was a buy signal last week. So if you're in this, hold. I think it's still pretty good. I think you still could probably try to that 21.50, 21.60, 70 somewhere for a trade. All right.
It's probably a good read through for travel though as well, right? Because they're saying
yep, agreed. 100%.
It demonstrates rapid growth in the business and provides strong momentum into FY 2024. So they're not like, oh, we're seeing a slowdown kind of thing.
Yeah. So another one that is a warning here for you. Low margin companies, ASB, Austal, from I think 50 something million in EBIT to zero on a blowout. Oh my Lord. I mean, this is just what can happen, right? If you've got a very, very low value, they're making like $1 billion in revenues and they've got a very, very small margin. So you can see what can happen, wipe out pretty much. Yeah, do not touch, warning again. Let's move on to another one, Kogan. Did you have a look at that one?
Yeah, had a quick look just prior to the show. Okay, so I think that, what Kogan's telling us now, I'm not going to trade Kogan myself. There's a bunch of reasons why, for me, on the online retail space, I am definitely like, this is a hard place to play. You saw it went to $20, it went back to $3. Ruslan's always get massive payments, and he sells shares when he wants as well. Obviously, a little slowdown, and suddenly you have a massive inventory blowout. Yada, yada, yada. I can tell you all the negatives. We've just actually had a super negative run for Kogan. And I think what we can say now is that probably, Peter, I hate to say this because I've been avoiding it for so long, but now I have to say that online retail space, I think that it's back in your basket of stocks that could be okay. I think probably some of them, obviously, they've had their COVID hangover. They've come down massively. The whole business model of advertising online got shook. The conversion rates for all of them dropped. The economics of it break. But you're going to get some that survive that. And Kogan now certainly, with a massive reduction in its inventory, I think they said they also repaid bank debt. They increased their cash. Like, this is a company that is fixing up its stuff. Now, that doesn't mean it's cheap or anything like that. But it's just more evidence to me that these companies that are the online sales ones, like, they're probably through the worst of it. But, of course, there could be that nasty consumer recession that comes around the corner. I'm not saying I like retail, by the way. I'm just saying just for these online ones, Temple & Webster, it's up almost 100% off its lows. Kogan, I'm guessing, is up 100% off its lows now.
Yeah.
what,
It is.
you know, Satire basically, okay, that one's also up, okay, 500% off its lows. Wow. We've just seen a huge move in the sector. In fact, I'd say, you know, we've actually missed some of it right now, but we're just seeing it across the sector now. And so I wonder, you know, are there other opportunities in that sector?
Yeah, look, just to quickly summarize Kogan for me today, and this is what I think the investors are obviously clinging on to. They can't do anything about the top line. I mean, we know that retail is fairly slow at the moment. That I think they've talked about today, down 30%, I think, the top line. But what they needed to do was concentrate, get the bottom line, EBITDA, and everything else in there. Inventories come down, all that fixed up. It looks like they're doing that. That's what the market's rewarding them for at the moment. So potentially once the retail returns back to some sort of normality, 12 months on the track, whatever, right? This is going to be much better business than it previously was. So it's given Kogan himself that time opportunity to fix the business, so to speak. And while I'm not a super fan of his strategy of moving into things such as insurance or I think telecommunications and so on, right? I think they should have just stuck to his main game, retail. You know, it is what it is. So you've got a business that's got many moving parts. He's fixing it, and that's what market's saying. Yeah, well, okay, we like what's happening here, and it's pushing back up. So for me, I wouldn't be looking at it yet from a longer term point of view, but I can see the traders are pushing it up higher. There's a bit of resistance coming up technically on 664. So if you're looking at a trade, if you got in somewhere here, you're probably taking a profit. And then maybe go again once it gets over that $7 again, right? So that's the technical side of things. If retail improves, that possibly we can see further upside to Kogan. But look, I don't mind Kogan as a business as a whole. I think it's, you know, plays a big part in Australia as an online retailer. So once things are looking better, I might be looking at it as maybe as a potential trade. All right, let's move on to the next one. And this one,
Peter, just can I get your opinion on one? Just a pure interest one for me. Yeah. RBL, that's the online retailer that hasn't come up off the ground yet.
Yep. All right. So you want me to talk to that technically or what?
Yeah, just technically.
No.
Well, what's it need to do? Like
a lot. It needs to get over 56 cents, I think. So you can see it's still struggling to get through that red line, right? Which is the aggressive line normally. But yeah, it needs to do a lot more. So it needs to put another 15 cents, which is all about 20-30%. Before we look at it. So technically speaking, it's just not there yet. Yeah, probably. I don't even know when it's going to get there, but yeah, not actually. To be honest, perfectly honest with you, Claude, you'd be selling this at the moment because it is a resistance, and you'd go, okay, I had my little bounce, and maybe I want to get out of it, and then wait for it to get over that 56, and then I'm going to get in when the momentum returns. Because remember, this is where what we're looking here is momentum. Momentum here, there is no momentum, right? It's trying, failing. So momentum is just not strong enough. So you're trying to sell into that piss poor momentum and get into it when there's actually strong momentum. And, you know, strong momentum will come when it gets to the 56, 57 cents, 58 cents. So yeah, that's what I look at technically speaking. All right, so let's look at the one I really like today, an update wise. And I'll tell you why. This company has been coming up with 100% growth for the last 2-3 years, Claude. So if I look back, I'm going to look back actually 3 years, right? I remember they're coming out at about 5-6 million revenues in FY20. FY21, 10.9. That's probably about 100% growth. FY22, 29. That's a one-off of 9 million on that NFT sales, right? So let's call it 20. That's still 100% growth. And now they are guiding between 50 and 55 million in revenues. This company is growing at 100% over the last 3 years. You've got to admire that. And I tell you what, that chart says, buy me now. What do you think?
I like this one sort of for similar but better reasons than Catapult. Like they haven't done so much damage in the market. So I think that there's not too much distrust of these guys. I don't think the business is very high quality. A lot of just contract development, like, you know, Meta or someone pays them to develop a game and they don't make a big margin off that. So I think in reality, it's not a very good business and it's not worth very much. However, that's just the reality of what the profits are going to be. I think what affects the share price of this stock is, perceptions around growth, opportunity, lack of alternatives on the Australian stock market. So we do have a few, game adjacent video game or video game developer kind of companies on the ASX. They're not the only one, but they're easily the best and biggest one. Like, just easily by a long mile. They the games that they own themselves, the IP that I've played, not that impressive. I'm not super impressed with this in reality, but I just see them as way better than any other option on the ASX if you want like video game development. So that kind of thing. And yeah, like this is just more evidence of like these guys are a significant video game studio in Australia doing a variety of different work. You would want them to succeed, generally speaking. Why shouldn't Australia have a computer game industry? And, the revenue growth there. So I just think that the chances that at some point the market sort of falls in love with this one again, I think that they're very real and very high, especially if they, the market loves high growth rates. They love a good thematic with tailwinds. There's no other options on the ASX really, or this is the best, in my opinion, option on the ASX.
Yep.
So all of those factors could become a bit of a FOMO stock. Obviously, this is a trading thesis, not like a long-term investment thesis, but that's the angle I would see.
Oh yeah, definitely trading thesis for the moment. But you know what? There's actually some credibility in this as well, because you've got, the Metas of the world that are obviously partnering with them. They're paying them money to develop some stuff. Plus, I love the
they're
fact
a genuine company. Like, I don't think they're a high quality business, but they're a genuine business and they're doing good work, and you'd want them to keep succeeding.
Yeah, and the other thing is, I think they did an extremely great job at buying that Dumb Way to Die franchise for 2-point-something million.
Founder CEO is a savvy guy. Yeah. Like, I don't necessarily mean that means that all shareholders are going to win, but like this guy's clearly built this business out of his like basically at the vanguard of an industry in Australia, and it's a forward-looking industry. So it's actually good, in my opinion, for both like it's good if this company succeeds. Like, we need these kind of industries.
Yeah, absolutely.
It's a tough business to be in, and I don't necessarily think it's going to gush profits and dividends anytime soon. I think the share price is just going to trade on sentiment.
Yeah. Now look, I think you're buying this on like I said, on that announcement. You're buying this on the charts. You've got a nice stop just below. I think I would probably leave it at 40 cents. And then you hopefully take it maybe to that 70 cents somewhere there. Yeah, so look, I like it. I think this is a good update. Like you said, there's a lot of sentiment push for this. FOMO probably push for this 100% growth. You can't beat it anywhere, really. Find another company that has grown 100% over the last 3 years. None, really. Maybe Satire, maybe, or something like that. Or no, maybe your CHL, I think, has been doing it top line growth by 100% as well, right?
CHL, another pretty good one, in my opinion.
All right, let's go a couple more, because we got to wrap this up, because we still got the thought of the week. So a couple of more quickly. CTM, some good results. Nickel wise, pretty deep, but nice grades. So potentially from that, it still looks okay. But you wouldn't be trading this at the moment. And last one is ALQ, came up with the AGM today. Let's have a look what the reaction is today. Is it trading? Is it not trading? And yeah, below trend. So we're not interested in for the moment in this. So let's move on to thought of the week. I asked you this morning is give me your best impressive update / quarterly, we've seen over the last little period.
Yeah, so I got to go with MAD today, MAD. Obviously, we've talked about this one before. Just basically think that it's a high quality business in its industry. Its industry is not necessarily that high quality. Obviously, mining services, maintenance kind of thing can be quite cyclical. MAD Group more on the ongoing repair and maintenance than on a new project stuff. Still kind of affected by new project stuff. Obviously, can be more demand. So semi-cyclical, you might call it, but just great high insider ownership. Great sign that he's managed to grow the business without taking on much external capital. Suggests a very savvy operator. Huge company now, 1.2 billion, not in the ASX 200, probably will get it in eventually. Could be, if there's a little sell down, not too much from the founder, loosen up the liquidity, you get in there, there's a boom of passive buyer. For me, this is one, I'm not with you on it because I stupidly sold it and didn't buy it back in when I was trying to simplify my portfolio. This should have been the first one I bought back in. Now, my only concern would be it's kind of priced in now. Like it's like, say on my numbers around 30 to 33 times earnings for this year. So it's definitely priced for growth. At some point, the growth may turn around because it is, I think, probably at least semi-cyclical or a tad cyclical. Now, there's no sign of that so far. So I would personally say, basically, I would not be bearish on MAD Group until the results stop being so darn good. And this was a record quarter, record EBITDA, record revenue in its two main segments. It's got a tiny segment, rest of world, that it's not trying to grow, that wasn't record. But record everywhere it mattered. Love the heuristics.
Yep.
Still outside the ASX 200, just absolutely my favorite quarterly so far. And trust me, I would have liked to find something different because it hurts to look at this one keep going up.
Claude, let me help you with this because the chart looks so good. It's actually a buy. I'll be buying this on the technicals, right? For a trade, right? Maybe not from fundamentals because it looks expensive, but from a trading point of view, the daily and the weekly looks excellent. You're buying this. And you may be taking it closer to the $7, right? That's what I'd be looking at, about a 10% trade on this. And like you said, there's so much FOMO in this now. There's so much positivity. They cannot put a foot wrong. So if you're looking for the long term, I'd say patience. Let's see if it goes back to that 6, maybe 550 somewhere over a bad month or something like that. Then you buy it back. But as a trading one, you're buying it today and you're taking up that $7. It looks very good. And I tell you what, you stole this idea from me because I wanted to talk about it this morning.
Yeah, sorry.
Anyway, I've got another one. And another one that's really updated very, very well in June. And that was IPD Group, another one that's bloody smashing the lights out. And I think this one may be giving you a bit of an opportunity to get in, even though it's not cheap either, right? The reason why I want to talk about this one is, again, they delivered an absolutely fantastic update. I think the top line growth was 30%. But the beauty about this is they're improving, from what I can see, EBIT is getting improving on the revenue. So while the top line is growing about 30, you've got the EBIT growing at about 40. So potentially margins are getting better. And I love the fact that they're in this electrification side of things. So, while the electric part of it maybe is a little bit boring, still there's a lot of demand for the products and they are acquisitive as well. So they're probably going to add a little bit more to their business. But I like that other little business they've got, and that is rolling out the charging stations for the electric cars, right? So this is why maybe I've got this longer term view on this. And if they can play the cards right, if they can execute well on this, if they can move with however the market's moving in that electrification side of things, they do very, very well. So for me, it's a story that you probably want to own, at a price. So I really like that update. That was really strong for me. Obviously, they had a pretty good jump on it. And if any weakness for me is a buying opportunity. So I think maybe 450, maybe if it gets down to 4 for some reason, you're probably buying this because you want to see a swinging chart, and it's done that previously in a fairly shallow, my ad, but it is a good looking chart. So for me, that was also a very, very good update, and I like it. So there's actually quite a few out there which I like. So overall, you guys have got plenty to choose from. But thank you very much, Claude. I don't want to go any longer because we've been going quite a long time already. Thank you so much for joining me. Have a great day, and everyone, I'll see you again tomorrow.
No worries, Peter. Thanks, and have a great day, everybody.
Cheers.